Our guest today is Nicole Judd. She runs a business by the name of Judd Insurance Services, and she helps people make decisions that are best for them, especially when it comes to Medicare and the choices that best benefit them and their family. Medicare is not an easy thing to understand. There's so many different choices and supplemental plans that I believe everyone needs to take some time or have an expert in their corner. And that's what Nicole does. She helps people decide what's best for them and their families. We also get into the concepts of pre-Medicare insurance, how to set your family up for the right type of plan, and how to choose plans that are maybe even on the current marketplace under the Obamacare Affordable Care Act. So let's jump in with Nicole. So Nicole, you've been doing insurance business for 16 years or more.
Yes.
Tell us a little bit about how you got into this role and why you developed more of a niche in the health insurance realm.
Sure. So my father-in-law did this for over 40 years. And when he was looking to kind of step back, not fully retire, but just work a little bit less, and my kids were starting to go to school, and I just thought it would be a good fit, and so did he. So I started working just part-time. Great job. It's mostly seasonal. I work really, really long hours, like October, November, December, and part of January. The rest of the year is very flexible. So I started doing it just kind of part-time. When the Affordable Care Act passed, my father-in-law didn't want to deal with that. And so he pretty much all the new rules and regulations, he decided that he just really didn't want to deal with that anymore. So I took over doing most of his individual business. So for people that are 65 and under, doing their healthcare. And then I also do Medicare. He did both as well, but predominantly Medicare, which is for people who are 65 years or older, or if you're on Social Security disability for 24 months, then you can be on Medicare for if you're under 65.
And so you're working mostly with individuals who are seeking help, whether they're trying to get a policy for them and their family, or they're now graduated to what we call Medicare, right?
Exactly.
Into the world of Medicare and
Exactly.
government assistance.
Yes, exactly. That's what I do. I do some small employer groups. So really, if you're like under 20 full-time employees, I do a few of those as well, but predominantly Medicare and the individual under 65. Yeah.
There's so many nuances.
Yes.
Sean and I are always looking at each other like, how do we figure this out? This is like reading the tax code, Social Security. Everything the government does is complicated. It's complex.
Yes.
Yeah. When I met you, I think it was at a wine tasting, right?
Yes, it
and
was.
Where I was
yeah.
like, what do you do? And you're like, Medicare. And I was like, oh my God, this could be someone that could help answer hard questions that
Good
we're getting from
resource.
our clients, because it is difficult. And I really believe, like, for finances, you need a financial advisor. For medical stuff, you need a doctor. For Medicare, you need a specialist. And we've had great success, with clients we've sent your way. I always make the joke that they've helped uncles Gary and Mitch Peterson. If they can help, or if you can help them, you can help anybody.
Yeah.
So it's very important. Like Billy said, it's so confusing.
Yeah.
But, I know people start getting mailers all the time when they start getting close to, probably 63, 64, 65.
Yep.
What should they be thinking about when they approach that age with Medicare? Like,
For sure. Absolutely. They say you get more pieces of mail when you're 64 than any other time in your life.
Yeah.
And the rules are anyone can mail you whatever they want, as far as marketing from other companies, and your name and information's out there, whether you want it to be or not. They know that you're turning 65. And so they'll mail you all kinds of things. But really, if your birthday is any other day other than the first of the month, 3 months before you turn 65, you want to start paying attention to what you're getting in the mail. And then if your birthday is the first, it's 4 months ahead, because your birthday is going to determine when you're eligible for Medicare. So if your birthday is the first of the month, you're eligible basically the month before you turn 65. Everyone else, it's going to be the first of the month in which you turn 65. So even if your birthday is like July 25th, you're eligible July 1st.
okay.
And you'll want to start looking and comparing your options 3 months before. That's the soonest that you can actually, put something into action.
So if a listener out there is getting close to 65 and let's say they're still employed, do they need to jump on Medicare even if they're still employed?
So they do not need to jump onto Medicare. It's going to depend upon their situation. And so that's where if you reach out to someone like me that's an independent insurance agent that can help compare all your options, you're going to want to see if going on to Medicare is going to benefit you, or if it's better just, especially if you're on an employer plan. So, or you have other credible coverage. That's the big thing. Because if you have other employer coverage, whether through yourself because you're actively working or through a spouse, then you do not need to sign up for Medicare when you turn 65. There are no penalties as long as you have credible coverage. So you can sign up at any point in the future after, you're eligible when you either retire or lose that coverage. We can get into basically what you're going to have to pay to have Medicare because it's not free. You've paid into it.
Hold on. Sorry. It's not free?
The government doesn't give us stuff. Wait a minute.
Yeah. So parts of it are free, but overall, no, it is not free. You've paid into it most of your working life, or your spouse has for you if you don't work. But you are going to have out-of-pocket costs. And so you're going to want to compare what the employer coverage is going to cost you and then what it would cost to go onto Medicare. And someone like me can help you do that. So 3 months before, I get a lot of phone calls where people saying, I'm turning 65, but I'm still working. What should I do? And that's where I can sit down and help them compare what it would cost to go onto Medicare and what the coverage would be, and then what it would be for their employer coverage. Just, you can compare them and see what would best fit their needs.
Depends on your employer and what they're kicking in.
Absolutely.
Type of plan you have.
Yeah. If you're happy with the employer coverage, for the most part, most people, especially if you are like a higher income earner, and we can get into specifics of what you have to pay for that. But if your income, if you're married, if it's over like 200 and something thousand, you have to pay, they call it an income related monthly adjustment that you pay more to have Medicare. And so if you are a higher income earner and you're still working, you're most likely better off sticking with your employer coverage.
They've got a trap. Every time you turn around, there's another trap.
Yes. And it's usually if you're successful.
Yes.
Seems like, to me, you get penalized.
Yes.
You get taxed and then you pay for this additional insurance. But let's say this typical scenario with, husband and wife, they're now retiring, and let's say they've passed that golden age of 65, and they know that they need to do something, to get a Medicare plan going.
Okay.
So now what? Now they're going to maybe contact somebody like you, and I guess they could do it themselves if they absolutely felt comfortable with it. But most people probably want some help.
Yes.
What is the process? How long does it take? And let's go through some just examples of scenarios of the type of people who are, number one, very healthy, or number two, not so much, and what type of plans they should choose. Okay.
A couple windows to keep in mind is there's different times you can sign up for Medicare. You can't just do it whenever you want. So the first one is, they call it your initial enrollment period for people who are turning 65. So you're first eligible for Medicare. And so it's going to be 3 months before your 65th birthday, like we talked about, and then the month of your birthday, or 3 months after your birthday. If you miss that window and you don't have other credible coverage, you cannot sign up whenever you want. You have to wait until January 1st of the next year and then sign up at that point.
Okay, so let me pause you right there. If that was the scenario where the person was still working, they're 65, would you advise them to sign up and just not pick up coverage, or just wait?
No, that would be for someone that didn't have credible coverage. Okay. So if you have other credible coverage through, like, you're working, or maybe you have TRICARE for life because you were in the military, or VA benefits, or something that's considered full credible coverage, you do not need to sign up when you're 65. But if you are not working, or if you have health benefits and you're retired, it's different than if you're actively working. So like a lot of people here in this area worked at Hill Air Force Base, have federal benefits. If you retired before you're 65 and you have health insurance through the federal benefits, you do need to sign up for Medicare when you turn 65 in that window, or you will pay a late enrollment penalty. And that's if you don't have other credible coverage. So like I said, if you're still working, doesn't apply to you, you can wait until you are going to either not be happy with that coverage and it doesn't fit your needs anymore, or you retire.
Okay.
Does that make sense?
Yep. And so you got to the window.
Okay.
Now you're at January window. Now you're.
So that's the first window. The second window, which is going to apply to most people, because most people are working past 65. And so if you're actively working and you delayed going on to Medicare because you had other credible coverage, then you qualify for a special enrollment period. That window, basically, you can sign up for Medicare anytime you want. The soonest you can do it, and what I recommend people to do is to contact or start looking at it 3 months before, because you're going to need to actively sign up. The government is slow to process these applications. They're really easy to do online. You can just go to medicare.gov, or I walk my clients through what they need to do, but it's done directly with Medicare. You do have to provide proof. If you delayed going on to Medicare, you have to have your employer sign a form that shows that you did have credible coverage to waive that late enrollment penalty. So you don't have that. So there's one additional form you have to have signed, but you turn that in ideally 3 months before you want it to go into effect. You can do it, with a shorter time frame, but there's often times that they just don't process them very fast. So it takes them at least, so if you go to medicare.gov, you sign up, it's going to take them minimum 3 to 4 weeks to process that application. And Medicare is always going to start the first of the month. There's no mid-month starting. So if you do have that special enrollment period because you're going to retire, ideally, if you know ahead of time, great. Oftentimes people say, I'm retiring next month. We just make it work. You submit the application, and you can do that, like I said, anytime. You have up to 8 months after you've lost that employer coverage to use that special enrollment period to sign up for Medicare. Most people don't want to go without coverage, so they usually go right from their employer coverage and have Medicare start the first of the next month.
Is that 8-month period because of their COBRA eligibility?
No,
or is that something different?
It's just different. Yeah, it's basically just a special enrollment window because you've lost credible coverage that they allow you to sign up for Medicare during that window. So you have the full 8 months if you want to use it. Most people, like I said, do it where there's not a gap in coverage.
Mm-hmm.
Yeah. So I'm just envisioning I'm on this health insurance coverage, whatever I had before Medicare, and I've got my doctors and all my prescriptions. Now I'm switching, it feels like. So how do you make sure people are still going to be comfortable, I guess, with what they've been doing?
So the nice thing about Medicare is the coverage usually is going to be better than what you've had with your employer plan, or for sure than what you've likely had if you have an Obamacare or a private insurance plan. I mean, you've paid into it, and you're still going to have to pay a premium to have it. And there's different options, which we can get into depending upon what your needs are and what kind of coverage you want to have. But if you meet with someone like me, and this is why I recommend people go through an agent, whether independent agents are ideal, that just means I work with multiple companies. I don't work in-house for one company, so an independent agent can help you compare all of the different choices.
You don't have an axe to grind with any company.
No, I'm just going to try to find what best fits your needs. And we cannot charge a fee. It doesn't cost you anything to go through an agent.
It's not extra. It's built into the premium, right?
Exactly. The premiums are exactly the same, whether you do it yourself online or whether you go through someone like me that specializes in this. And so that is where, if you go with an agent that is going to help you find a plan that's going to let you see all the doctors you want to see, make sure your medications are going to be covered as well as they can be, look at any immediate needs that but then also the biggest mistake that people make is that they don't think about what their health is going to be like in 10 years, 15 years, 20 years. And so some of the choices you make when you're first eligible for Medicare, they can affect, what your coverage is going to be down the road. And so that's where, if you want to meet with someone that does this, you mentioned in the beginning, Billy, why do you do just health insurance? It's because there's a lot of information, a lot of different plans. It's very confusing. I don't feel like I could be an expert at this and then also do life insurance or annuities, or it takes a lot of training and a lot of experience to know what's going to be best for your clients.
And keeping up.
Staying abreast.
Yeah, that's what I was going to say. It seems like laws and rules change all the time.
They're
like these little nuances, like this 8-month thing or the 3 months before. Like,
and they change all the time as well, which is so fun.
Wow.
Well, Congress is notorious for that because that's a hot button for most people.
Yes.
And of course, we know that we're still having issues in the economy with people being able to afford their lifestyle. With the inflation that was unleashed 5-6 years ago, it's still affecting people. And insurance is a big part of any household's budget.
Absolutely.
And it's becoming more and more so. Sean and I were just talking about that the other day, is the insurance premiums that people are putting out, it certainly doesn't go down.
No.
And it's getting more and more expensive. And so the people are asking us all the time, how can we find a more reasonable policy? How can we cut some of the expense down? Of course, you can do things like, well, raise your deductible to a crazy level, but then you better have enough money in the bank to take care of that in the event of some unforeseen accident or injury or health issue. But what do you advise? And maybe the next step in that line of questioning is the insurance industry irreparable? Is there anything we can do to right the ship? Because, I'll have a few theories on that in a minute as far as why we're off the rails on costs. But go ahead and maybe you can answer some of that.
Yeah. Okay. So it's going to be a different, my thoughts will be different on what kind of coverage, because Medicare's actually been pretty stable. Costs are going up. Out-of-pocket costs for people are going up a little bit, but it's been pretty stable for at least the last 16 years. There's been changes for sure, but overall Medicare's been a lot more stable than the non-Medicare market. So when you're hearing about people's premiums, doubling.
We're probably talking about the
Affordable Care
pre-Medicare.
Act. Exactly.
Yeah,
so
right.
those are where you're seeing a lot, huge jumps in premiums, things like that. Medicare's been a lot more stable, but there are, they're seeing increases in costs as well, in premiums and benefits for 2026 overall, depending upon what kind of plan you're looking at. And the benefits aren't quite as good as they were in 25. You're paying a little bit more for coverage. It isn't quite as good. But for Medicare, it's honestly, it's really good coverage, no matter which way you decide to get your Medicare benefits. It's more the non-Medicare where you're seeing those huge jumps.
Is it because the government just subsidizes everything? And obviously the government has money everywhere. The government never goes broke, although it's broke if we really wanted to look behind the curtain.
Yeah.
But it seems like the government just continues to subsidize, and I'll call it sometimes losing propositions, where the government has kind of let Social Security go to a point where it's going to be bankrupt in just a matter of a few years if we don't do something, just because of the way they run it, the way they handle it. They look at it as, here's the way we set it up, and by the way, now we didn't think this through very good, and we've already used that money for other things, and now Social Security program is going to be broke. And I'm not sure if that's the same application for Medicare, but I do know that if the government wasn't subsidizing and helping, it would probably be in the same boat as the Affordable Care Act. Am I wrong?
Overall, part of the big issue is our healthcare just costs a lot more than anywhere else. That's the issue. So you can talk about insurance being more expensive and all that, but the issue really kind of comes down to, why are our costs so high? And there's a lot of I wish I had a solution to fix it. Yeah, if I did, I wouldn't be doing this. I don't know. It's for someone much smarter than me to figure out. There's a couple different factors. Like when I, go to trainings with different insurance companies, they all have their reasoning or their justification of why premiums are so much higher. But part of it with the Affordable Care Act being passed is that they have to cover everybody now, right? So whether people before that maybe wouldn't have been able to get insurance can get insurance. Everyone, there's no pre-existing conditions. They can't deny you coverage as long as you apply during their specific windows. So that drives costs up for everybody. Healthy people, as premiums keep going up, drop coverage, right? And so that was kind of part of the Affordable Care Act and the issues where they were going to penalize people. You had to pay a penalty if you didn't have coverage. They're not enforcing that. So it's kind of eroding if all those healthy people were, in the pool, it offsets it a little bit.
Yeah.
Part of it is the prescription drugs. They say that that's one of the biggest drivers. The pharmaceutical companies charging insane amounts of money for,
You're going to get Billy started.
Yeah, I know. So, I mean, that there's different drivers, but like I think a lot of businesses, they say a lot of the expenses come from just the top percentage of users. It's the same kind of thing, right? You look at prescription drugs and there's like 15% of the most expensive drugs account for over 80% of the overall costs.
Well, in our society, everyone believes that they need to be on prescription drugs.
Yeah.
And we're one of only 2 countries in the world, by the way, that allow direct to consumer advertising on the television. You can't watch a Super Bowl or any sporting event or any TV programming without multiple ads for new pharmaceutical, new drugs for everything.
Yeah.
So it's basically, becoming ingrained in society in our country that you don't need to do anything personally. You don't need to change the way you live or do anything for us to help yourself. You just need to get a pill. Mm-hmm. And, you wonder why the cost of everything going up. And you said a minute ago, I like the term you use, the people who are using it. That's really another thing that could be a major problem is the number of folks who are just continually head to the emergency room for small, minor incident of health and continue to go because there's nobody pushing back and saying, no, we can't see you. And yet the people that aren't using those services and just paying the premiums, of course, they're not taking advantage, let's call it, of any of these health services. But that may be why we're seeing as a country that this thing is becoming unaffordable as far as the Obama Affordable Care Act. Mm-hmm. Too many people are abusing almost the privilege of having the health care coverage. And the costs are, you can only support it for so long. Yeah.
On a positive note, you had mentioned before just kind of maybe some of the things you could do to help. And I think the biggest advice I give to all of my friends or people that ask that are in their 20s, 30s, 40s, open up an HSA, get a high deductible health savings plan. They changed the law just recently in 2026. If you do have a marketplace plan, so that'd be like an Obamacare plan you purchase through the marketplace, all bronze plans in 2026 are eligible to open up an HSA account, even if you do not have an HSA plan. Whether you work for an employer, if there's an option for a high deductible health plan where you can open up an HSA, if you're healthy and never use the insurance, great, max out your HSA, but it's a way to look long term when you're talking about how are we going to handle all of these costs. That's what I say. Just like a 401k or an IRA or whatever, start doing that for your healthcare. Because I don't know what the solution is to drop our healthcare costs. Mm-hmm. I don't know if they'll ever find one. So as it goes, at some point in your life, you're likely going to need, healthcare. And so that's why you have that as to help offset it. You can use that HSA as far as Medicare goes. You can use it for your Part B premiums. And if you have like an IRMA, because you're a higher earner, you can use HSA funds for that. You can use them for Medicare Advantage plans. You cannot use them for Medicare supplement premiums. That's another thing, but you can use them for any out-of-pocket expenses down the road. So if you're healthy and you're 30, get an HSA, max it out now. Just don't think about it. Have it come right out of your check. And then that way, when you do get older and maybe need, more health care, you have some money put aside. Yeah.
We've talked about that before. I think just on a recent episode, it's a pretty powerful account, but what we try to encourage people to do that have the high deductible plans and the HSA is you put the money in, but the power of it's got to get invested, right? So look at that and then, call us or work with your advisor to pick out some good investments and then don't use it, right? You don't use it.
Some people think they still use it or lose it, get it out of there.
Use it or lose it. It's not like a FSA or whatever. I can't remember, flexible spending account. But that's the power. You get all that growth. And then as long as you use it for a medical expense down the road, comes out tax-free, all that growth.
It's just like saving for a college funding goal in a 529 plan. I mean, you don't put it in there and take it out the next year. It didn't really help you.
You got a little tax deduction for putting it in there. But, I do the same thing. And I'll share that I'm a client of Nicole's and she hears me complain every year about the private health care costs going up, and it's substantial.
Yeah. It's crazy how expensive the premiums are. And then also the coverage, like your deductibles are higher. Your
my out-of-pocket, I think, is $18,000 a year. I mean, it's catastrophic coverage, but I'm kind of almost getting to that point. Like you said, people are just done.
And you're probably on a higher deductible, aren't you?
I am. Yeah.
You know, I mean, what's the average type of policy for people, you know, decent income, let's say making $200,000 to $300,000 or more household? What are you seeing? What are most people doing now on the deductible side to save some?
So the plans now, whether you do it through the marketplace or direct with the insurance companies, that's another thing people don't realize. It's the same exact plan. I have some people that come to me like, well, I don't want Obamacare. Well, you're getting Obamacare as long as you're doing traditional major medical insurance.
Just call it something else.
Yeah, yeah. So, but it is. It's the same exact plan, the same premium, whether you do it through the marketplace or direct with the insurance company. Now, some companies like Select Health here in Utah, Regions Blue Cross Blue Shield, they do have a couple plan options that are available only direct with them that are not on the marketplace. But all the plans that are on the marketplace and direct with them, the premiums are exactly the same. But most people, they're given metallic levels. So bronze is going to be the lowest monthly premiums. They're supposed to cover like actuarially about 60% of the costs, meaning like the insurance company in general pays 60%, you pay 40%. The silver would be 70-30. The premiums that's middle of the road. Gold plans, 80-20. That's what most people used to have. That was kind of baseline. Most employers was like the insurance company paid 80%, you paid 20%. And then there are also platinum plans. I don't have not one client on a platinum plan because the premiums are ridiculous. I have very few people even on gold and silver plans. The majority of the people, especially the scenario you mentioned that are not getting subsidized, they are almost all doing bronze plans because it doesn't make sense when you look at what you're going to pay in the premiums and you see what the out-of-pocket maximums are. The silver and gold plans aren't that much better than the bronze plans, so you might as well save the premiums and go with a bronze plan. The least expensive plan in most counties in Utah, and it's county by county, that's how the premiums are determined. And then based on your age and whether you're a tobacco user, that's the only health question they can ask. But it's the plan that Sean has. It's a $6,900 deductible for an individual, double that for a family. And that's a bronze plan. That's the cheapest plan that is available in most counties.
Go ahead, Sean.
Okay, I'm just thinking through my head here. So I'm paying whatever I'm paying. It's a lot. I'm complaining about it. Sorry. But if someone can go get that same exact plan and pay very minimal based on income, is that true?
Yes.
They get a subsidy for it, and it's the same exact thing.
Same exact coverage, same exact plan.
So I'm just going through in my mind, if I'm paying that much, am I not technically kind of paying some of their premium?
You are. I mean, in my mind, how are you not?
I feel like it's broken. The system is broken.
I mean, the government is helping the lower income. And I'm not saying there's a better solution. But,
I'm not either,
but
I'm just trying to
that's what they're
understand
doing.
it.
That's the system.
Yeah. But how it's set up is there's a crazy formula they use to determine whether you qualify for a subsidy, or the official name's advanced premium tax credit if we're talking about the marketplace plans. And how it works, they changed it just, recently. That was, I'm sure you guys know, and most people have listened to the news at all. They didn't get rid of the subsidies, but what they did is they went back to where they had an increase where it slowly phased out. Right now, if you're 100 to 400% of the federal poverty level based on your household size, you can qualify for some help. They use a weird formula where it's like the second least expensive silver plan that's offered in your county, whether you sign up for that one or not, but that's how they determine whether you're eligible. And anyone whose modified adjusted gross income is more than, I believe it's like 9.8% of the monthly premium for that silver plan, you get subsidized. So no one should have to pay more than 9.8% of their monthly income toward health insurance. Then the government kicks in and subsidizes. The lower the income, the higher the help.
What about for the folks that aren't covered, but still get coverage? Not technically covered, but even some of the immigration issues that we've had, do they not get health?
So they absolutely cannot get Affordable Care Act coverage. When people say, like I've seen it on the news, I've had clients ask me, So if you are here legally and you have a green card, I promise you every application I have done, I have to send copies of the green card front and back. They approve it and look at it every single year to see if those people qualify for extra help. Now, if you're not a citizen, you could get your own private plan. They don't ask for, you don't have to have proof of citizenship if you just went and bought your own plan. But through the marketplace to get government help, you have to be a legal citizen.
So non-citizens, if they show up at the hospital and they are ill or they've been in an accident, are they going to be turned away?
No, they wouldn't be turned away. Yeah, they've never been turned away. So if you go to an emergency room, they have to treat you. And then
who pays the bill?
So then the hospitals they try to collect what they can and then they write it up. And that increases their costs, which then why we have to pay, part of the whole system is then you pay more, everyone pays more now for that. But they're not getting Obamacare subsidies.
Okay.
That's
just a myth that's been passed around.
For sure.
But somewhere, some way, they're being subsidized by others because of the cost that they're potentially not picking up.
Yes, overall in general.
If the hospital or some other entity.
Is that why an ibuprofen's $500?
It is. It's crazy. I mean, I was just looking at my daughter's bill for the having birth, going through labor. And I was like, it just blew my mind with the costs of everything. And I compare that to my vet bills. I talk to Sean all the time, vet bills, my horses, and oh my Lord, the line by line. And I'm thinking, now when did that start becoming that expensive? But I think it's just a shell shock. And we always do it in our financial plans. We run a different level of inflation on all of our medical costs and healthcare costs than we do on just the general plan expenses standalone. So we're using what, 7 or 8%? 7 or
8% in most cases.
That's just wild to think, because as you know, the rule of 72 will tell you if you're getting 7%, it'll take 10 years to double.
Yeah. So your healthcare costs are going to double the first 10 years in retirement.
Which is wild. And you think about what you're paying now, and you're mad already, Sean. So I can't imagine how you're going to feel in 10 years.
You just got to get to 65.
I know that.
On Medicare.
But I mean, I almost lean sometimes towards, dropping everything. And then if something happens, all right, I'll show up. You can't refuse me. And then we'll talk about it later when I'm going to pay you.
So this is the issue, though, is if you have assets, that's a very risky thing to do because they will come after you. It's for people that don't have assets, and that's fine. The risk is that's the hard part. That's why you're paying how much.
That's why I'm mad.
I know.
That's why I'm pissed off about it.
He's trying to bury his assets.
You see the bills though, and that's why it's so risky to go without coverage. Because my son he's fine, but when he was 4, he had a traumatic brain injury, and the medical bills ended up being like $140,000 if we didn't have insurance. It was 1 week at Primary Children's plus a life flight and things.
Wow.
And this was 12 years ago, and so. We have a home, we have retirement accounts, we have, so if we wouldn't have had insurance, we would have had to come up with that money. That's the risk, is if you do have assets.
Yeah.
And, it's just our system's broken that it would cost that much money if you have just a stupid accident happen.
Yeah. Irrevocable trust. Okay. I've already got my plans.
You slide it in there.
Slide it in there, remove it from my estate. No, I'm just
nobody
kidding.
will know what happened.
What about some of these MediShare? Do you have some knowledge on those?
I'm
curious.
I don't personally do them. I think they're too risky. And so I personally do not offer them to my clients. I will let people know about them.
You're talking about the
health ministry or health share.
Sharing, right.
So they're not regulated. They don't legally have to prove that they have money to pay for claims. They don't legally have to cover claims. They can cancel your coverage at any time. And they are a lot more affordable because they don't have to. I personally firsthand have 3 clients that are my clients now that went that way that had coverage canceled on them.
What was the reason? Because they had too many bills or expenses?
So one of them was a cancer. One of them, they said it was a pre-existing condition for a liver issue. That this person had, hundreds of thousands of dollars of bills. Luckily, we were able to find a solution because they had other coverage that they were going to be eligible for. But and then another one, pregnancy, wouldn't pay for the pregnancy. No.
Was it because, now I'm going to give you full disclosure. I've been on MediShare for a while. And the reason I did is because I kept looking at the cost of my out-of-pocket, and it was going absolutely insane. And I was kind of like Sean, I was getting so frustrated because we would never go to the doctor and didn't have any prescriptions. But the out-of-pocket for my family, and I'm talking, this was probably 8-9 years ago when I started doing this. It was at that point $1,750 a month, and I went down to $375 a month for the Medicare. Now, I've never had to submit anything, knock on wood, but I feel like we take good care of our health. Now, I know things can go wrong, which is why I think having that, oh my goodness, accident or injury or something really went wrong with your health. But I do know this, they require you to state to the affirmative that you do not use tobacco and that you do not engage in relations, sexual relations out of wedlock. Marriage is first. So it's kind of Christian values. And I think that's where they're able to knock down a lot of the expenses or costs to the members, is they don't have people who are kind of living a life of sin, let's call it, or doing things that are going to potentially put them in harm's way from a health standpoint. So having said all that, and I understand where you're coming from, and no one wants to get cut from their insurance just when they need it. So what are the other dangers, and do you think there's something really significant with that? Could they just start cutting people?
Absolutely.
Because I think that would be very bad for business.
That's why they're in the news. That's why that's why they're going to start requiring them to state this is not actual major medical health insurance, because people think it is. If you get cancer, you go down to Huntsman Cancer Institute, they tell you want to start chemotherapy, that plan doesn't have to cover you. They can drop you the next day.
That would be bad for business if they started doing that.
Yeah, but that's what they can do. And that's what, if you look in the news, I haven't heard of any specific, like here in Utah necessarily, but that's why they're being like sued for fraud all left and right. So that's why I personally don't, if you're healthy, great. But if you need it, that's why you have insurance, is in case something bad happens, the serious stuff.
Sure.
My kid gets cancer, I want to be able to get them the very best coverage that they can get. And so to me, it's too risky, but it is an option. And there are people that can't afford regular coverage. So that's what they do.
It's kind of the next best thing for people in that situation.
Yep.
Yeah. Somewhere down the line, I think that we need to get our hands around the whole spiraling costs and where it's going and what it's going to look like. Because again, if we keep going up that rate, 7 or 8% increase in the premiums and the cost of it, you're out of pocket.
Yeah. I
think there needs to be a wake up, like a moment where people start examining. And I don't know how you feel about this, but I'm a pretty big advocate. I'm a pretty big fan of taking matters into your own hands. So that's why I kind of like Robert Kennedy Jr.'s message out there with the whole being involved with the health of the country and examining it from the standpoint of foods and what we're doing there. And are we eating healthy? Are we exercising? Are we doing anything to try to prevent some of these diseases that come up? And a lot of times come up because we just don't do anything to prevent it. We're always doing things that don't make a lot of sense.
Yeah,
we're one of the most unhealthy countries in the world.
Yeah.
I've read a lot of books on this stuff.
Yeah, no, I agree.
Every day I'm hearing stuff like that. But isn't it the statistic like 7 of 10 Americans are overweight?
I think that's the stat.
I think that's the stat.
Where did we go wrong?
Maybe it's coming down now with Ozempic and Wegovy and all those.
Maybe it's got to. Everybody's dropping 50 pounds left and right, but then I could go into that, losing gallbladders and different things too with it. So
I don't know.
I don't know how you handle it all. You meet with a lot of folks, probably hearing about all their ailments and I need this coverage and that'd be a lot of pressure. Like our job,
that's really what you guys try to help people figure out: retirement and how to be financially healthy. And I try to help people deal with whatever the current environment with our insurance is, which is ever changing. It's not great, but I help them figure out what will work for them the best. So
can you tell us a little bit about all the different types and parts of Medicare? Because it's so confusing. You got A and B and D, and go through that a little bit.
Okay, yes, absolutely. It's job security for me, I guess. But basically, original Medicare is what they call Medicare Part A and Part B. Part A is just inpatient hospitalization. So you're admitted to the hospital, not the emergency room, not like outpatient surgery. It also includes skilled nursing, which is like a rehab facility after a hospital stay. Medicare does not cover long-term care. A lot of people think that it does. It does not. So it's only going to be, and it's limited days for skilled nursing. And then it also covers hospice and some home health care. That's Part A. Most people, if you're eligible for Social Security, you're eligible for Medicare Part A with no premium. So most people don't pay a premium for the Part A. And that's where some people, if you're still working, you could get the Part A and still have your employer coverage with the Medicare Part A. You're not paying any extra. The only time you wouldn't want to do that is if you do have an HSA account or you want to contribute into an HSA. Because if you have any part of Medicare, you cannot contribute into an HSA anymore. The Part B is basically all of the other outpatient stuff. So doctor's office visits, outpatient surgeries, durable medical equipment, lab work, things like that. That's all going to fall under Medicare Part B. You do pay a premium for that. So everyone will pay a premium for Medicare Part B unless you're low income and get subsidized. But the standard premium this year for 2026, and it goes up every year. This year it's $202.90 per month, and Medicare is also just individual. So if you are married and you and your spouse are on the same plan, like with an employer, it is not the same with Medicare. It's all individual contracts. Everything is you're on your own. So you'll pay the same premium because it's based off of your taxable income, but that's the standard premium. We mentioned earlier the IRMA. So if you are a higher income earner, you pay more than the $202 for the Part B. And it maxes out if you're over $750,000 per year, and they look at your tax return from 2 years prior. So right now they're looking at their 2024 tax returns to determine your 2026 premiums. And so you can pay up to almost $700 a month for that Part B if you make over $500,000 as an individual or $750 as a married couple. That's the Part B. That's what they call original Medicare. Then there's the Medicare Part D. D like drugs. So that's the prescription drug coverage. This is for anything that would be outpatient prescription drugs. So things you get at the pharmacy that your doctor writes a prescription for. Those are private insurance companies that have contracts with Medicare. They range anywhere. This year, there's a 0 premium plan, which is pretty rare. And then they go over to $100 a month. Each Medicare Part D plan has a different formulary, which can change from year to year. They have different benefits. Obviously, the higher the monthly premium, the lower the out-of-pocket costs. But that is changing significantly because the law passed last year that no one would pay on Medicare in 2025 more than $2,000 out of pocket for their prescription drug coverage. This year, it's $2,100. So big difference. Before it was over $8,000 a year you could pay for your prescription. So significantly better coverage for the prescription drugs. That's the Part D. Then the Medicare Part C is also called Medicare Advantage. And that is where if you have Medicare A and B and you want to combine your benefits, you can get a plan called Medicare Part C or Advantage plan. They're private insurance companies that have contracts with Medicare, and they take over for your A and your B. So they're the primary payer, and that's what Medicare Advantage is. And we can, if you want me to go into more, we can do that, or we can come
I
out.
am dizzy.
Why would somebody do that though? Like, is that common?
Yes. So the majority of people do right now, people that come in, the majority do Medicare Advantage, and we can compare that. The other part, though, before we get to that, is it's not a part of Medicare. So those are all the different parts. Then there's Medicare supplement plans or Medigap plans. And so those are for people that have original Medicare and they want better coverage, because if you have just original Medicare, there is no out-of-pocket maximum. So it is very risky to have just original Medicare and like a Part D plan. And so most people either choose Advantage or original Medicare plus a supplemental plan plus the Part D plan.
Gotcha.
Okay.
I think.
Draw that matrix.
But
up.
if you're healthy and you're not too worried about it.
Mm-hmm.
Obviously, you're not going to just keep paying for insurance because of the one instance. I can understand why people who have a long history of health problems and who want that maximum coverage and they need help. Mm-hmm. But what would you advise somebody who's always been healthy, good outlook, good quality of life?
Sure. Okay, so the Medicare Advantage plans are very popular because right now, and for the since I've been selling them for 16 years, there's always been a zero premium option. So what that means is you don't pay any extra. You still pay the Medicare Part B premium no matter what. Just to have Medicare, you pay that. If you collect Social Security, they take it right out of your check. But you don't pay any extra to have the Advantage plan. And so much lower monthly premiums than if you did a supplemental plan. It includes the Part D drug coverage for no additional cost. So if you're healthy and want to just keep your costs down, plus you want some of the extras like dental, vision, hearing, free gym membership, each plan has, different benefits they look at. It's a great option. All of those plans do have an out-of-pocket maximum. So you'll pay copays along the way, but they're going to have an out-of-pocket maximum, unlike original Medicare. So there'd be no reason not to do an Advantage plan as far as protecting yourself from risk versus just doing original Medicare. Now, the downside to Advantage plans are their networks are going to be required. So some companies have very large networks. They're usually more generous than what you would find for employer plans or non-Medicare. Here in Utah, we have multiple companies that have all the hospital systems in their network. So a lot more doctors to choose from, but that can be a downside as you do have to stay within the network. Also, they can require prior authorizations. That's part of the thing that's been in the news with certain companies being sued, using AI to not, deny claims and things like that. They can require referrals to see specialists. So those are kind of some of the downsides. As far as Medicare supplements go, so those are going to be, once again, they call them Medigap plans. There's multiple plans. They give them letters. So Plan G is currently the best coverage that you can get if you're new to Medicare. So you have original Medicare as your primary. You have your private supplemental plan as your secondary. And between the two, you have minimal out-of-pocket costs for your medical, but you're going to pay a much higher monthly premium. So someone that's 65, that's just going on to Medicare, anywhere from $100, and depending on the type of plan, but if you're wanting the better coverage, $160 to $200 a month on top of that Medicare Part B premium, but you'll have minimal out-of-pocket costs for copays and things like that. Then you have to get a separate drug plan, the Part D. And if you want dental, vision, hearing, you have to have a separate plan for that. So the benefit of those, the best coverage you can get, no network. You can go any provider that accepts Medicare worldwide. It's very easy to use. There's no prior authorizations. There's no referrals. So if you want ease of use and you don't want to deal with an insurance company much, Medicare supplements the way to go. Or if you want the very best coverage, or if you have known high healthcare expenses. So you had mentioned a healthy person that doesn't do much, they probably don't need a Medicare supplement plan. One thing to keep in mind, though, is you do have to qualify for a Medicare supplement plan. You're guaranteed when you're first eligible for Medicare for the first 6 months, or if you've been on employer coverage and you're coming off, they can't deny you coverage. They can't, ask you the health questions. You're guaranteed in. After that, though, then you do have to qualify. So you cannot do a Medicare Advantage plan for 6 years, wait until you get a cancer diagnosis, and then say, I want the supplemental plan with the better coverage. So that is the risk of not doing it when you're first eligible, is you give up that, they call it guaranteed issue. So you're not guaranteed in. There are some situations where you would be guaranteed in, like if you moved to a different state, or if your plan canceled coverage on you out of your control. There are certain times that you can get guaranteed in, but most of the time you're not. So those are kind of the pros and the cons of those.
So I'm just writing down a few questions that I had, and then Sean's going to jump into a rapid fire response, which is kind of fun.
Okay.
But I've been told, I read this somewhere, that the majority of the costs associated with healthcare, if you lumped everything up together, the majority of the costs are associated with end-of-life care. Is that true? Do you know that?
No, I don't believe that that's true.
You don't believe that's true?
Well, I guess if you're lumping it together, so that could be the case if you're including like inpatient hospitalizations, because that's usually where the highest costs come from. It's inpatient hospitalization. So if that is end of life because you're there and then you end up dying, that could be true.
Okay. Wondering, just trying to get perspective on if there are any ways to alleviate some of the costs. I mean, obviously, hospitals, doctors, all the providers are in business to make a profit, to make money. So they don't want to necessarily say, hey, do these things, get healthy. I mean, I'm not saying that in a mean way. I'm just saying there's a conflict of interest in a way because they make money if people are unhealthy.
Yes.
Right? What do you think of the system?
Yeah, I mean, it's like our system is definitely broken. Like we talked about before, it is set up to, they're incentivized by, when there's things wrong with you.
Yeah.
The pharmaceutical companies, who I used to work for when I was a drug rep for multiple years, they make money not by you getting cured. They make money by you needing this medication the rest of your life.
Being under their control, so to speak, or
yeah. So I don't know. I try to personally just live as healthy as I can, do the right things most of the time, and hope I don't need healthcare.
Yeah.
But I still have it just in case. And
right.
I can, like I said, can max out that HSA in case I do need it down the road.
Just like your health or home insurance or your vehicle insurance. I mean, very few of us, other than my stepson Brig,
sorry, Brig,
have to get in, have to rely on their vehicle insurance all that often.
Yes.
Him, that's another story.
Yeah.
Or your house doesn't burn down every other year. But we have it just in case, because we all dread the idea, because we've seen the pictures, we've heard of people who've had that happen to them. So we don't want to be left exposed, and we understand that. I've thought about this multiple times, like maybe in another life, I want to start an insurance company, because I think there's ways to make money in it. There's ways to be profitable and to provide great coverage for people who would just do certain things. And my idea would be, and I don't even know if this is legal. It's probably not legal.
It's probably going to be legal, and then someone's going to jump in and slap all these regulations on you, and that's probably why we are where we are.
Why can't they say, for example, in order to be covered in under our insurance umbrella, you have to provide proof of going to the gym, or give us some sort of an annual physical. I don't know. I know that's kind of against the whole Affordable Care Act, because they want to cover everybody, and there's no pre-existing conditions. And I understand the premise is, some people just can't help it. The idea would be they can't get healthy. They're not able to get healthy. But what if they were? And what if you could have an insurance company that would provide coverage for people who are trying to be healthy more? Wouldn't the premiums be a lot lower in that regard?
Yeah,
Nicole?
they would. Yeah, for those people. The problem is just with insurance, you're looking at, it's a volume numbers game. Everyone pulls the premiums together to cover everybody. So if you pull out the healthiest people, now everyone left,
all the people that
it's going to be even worse for them.
Right, they're even worse.
Yeah.
And that's the whole thing about a society, and it's almost like a socialistic society where everybody that's doing good is helping the people that aren't doing good. And that's the same when you're health, right? The people that are healthy are kind of helping the people that are not, because people that are healthy they're paying the premiums, but they're not using the resources. So that's the idea. Now, how do you help the folks that who are not able to do it? Maybe could that potentially flip that switch in their mind? Maybe they could start going in the direction of choosing that path of, I want to be more healthy, and I'm going to make better choices in my life. And I know that sounds simplistic, but I'm a true believer in we have a lot more control of our outcome of our life than we're sometimes led to believe. I think we're led to believe that we have to have drugs and we have to have doctors in our life on a daily basis. No offense to our doctor friends and clients. I just believe that there are certain things that we can do to keep ourselves on a path and stay out of the doctor's office and stay out of the emergency room. And my idea is to not have to have prescription drugs.
Yeah.
Right? So I don't know if that's
you keep talking about this long enough, you're going to start it, because I've heard about Billy's insurance company for a long time.
So the issue becomes, though, then what happens to the person, like my son's accident? He was healthy, and I mean it's not just health, because health you lump it into there, it still falls under your health insurance.
The accidents can happen. I get that. That's a good point. However, that can go along with anybody. On the healthy side of things, or the unhealthy side of things,
Yeah.
accidents are going to happen, and we don't know that. But that's why we have insurance.
Yes,
Because if
exactly.
no one has an accident, no one's ever going to
Yeah.
get sick. No one needs insurance. We're just good. We're fine. I don't know if there's a better way to do it, guys. I'm just speculating, and I just wish there was a system, and I really wish this wasn't all run for profit, because I do believe that maybe 100 years ago, when doctors were truly looking at you as a whole being, and rather than just what can we make off of you, it was a different world. Doctors were really had a good intention. I'm not saying all doctors are that way. I just think that there's a profit motive.
Yeah.
There's a profit motive out there. And by the way, speaking of that, are insurance companies evil in all respects? Because I know that's some of the trendy thing with people in social media out there that, insurance companies are bad. They're always going to cut your benefits. They're not going to give your claim. I mean, we had a guy murdered in New York not long ago.
Yep. So they're businesses, and there are ones that are nonprofit, right? A lot of them are nonprofit. And so, I see the good and the bad. I see some that seem to, I'm not going to name names, but seem to really want to try to do the right thing, that really do, they want to do the best for their clients and their members, and others that do seem to run it more just like a business. It's hard from my little window with my, number of clients to say what it would be overall, but I don't think that they're evil. I think it's part of the broken system, right? It's not just, people want to blame the insurance companies for the high premiums, but why are the premiums so high? It's not just because, yes, they're paying their CEOs a lot of money, and yes, there's, they're making profits and things, but it's not just that. It's because our costs are so high. And no one really wants to be the ones to say, hey, okay, are you going to tell the doctors? Are we going to have to go in and reform and say you can only charge this much, and now your income's going to be, halved? Yeah. I mean, that's the hard part. We want the very best care. We want to be able to get the care exactly when we want it, but we don't want it to cost so much. And so something's got to change. I don't know what the solution is. I wish I did.
It's a good way to look at it. I think we all have a lot of questions there, and no one has a great answer.
Yeah. Well, in a tough, broken healthcare system, you do a good job of,
try
mapping that out for people. So if you're out there listening, Nicole is a great resource. We've had good success with her. So
thank you.
Let's move on to the rapid round. What do you call it?
Rapid fire.
Rapid fire.
Just whatever comes to mind.
Whatever comes to mind. We're just going to ask you fun questions. Listeners really enjoy this. So, I met you at a wine tasting. Favorite wine?
So Napa Valley Cabernet. I'm a Cab girl. I grew up in the Bay Area, so not too far from Napa. So I'm like a big Napa Cab. Yeah. Specific brand. I love Silver Oak. Never can go wrong with Silver Oak.
Nice. There you go. Yeah. Nice Cab.
Favorite vacation you ever?
Oh, you stole that one. I know she travels a lot.
Okay. So I haven't, since we've had kids, we haven't done as many exciting, but I'd say 2. So I went to Vietnam before I had my first son. So we went in, I think it was like 2008. It's become a pretty big travel destination, but we went before it got too popular. And that was amazing. Part of the trip, we took this train to northern Vietnam into the city of Sapa, and it's right on the almost Chinese border. And we had a Vietnamese tour guide that spoke English that we hiked to the very peak of this. It was we hiked for 8 hours or something, and stayed with this local village family that cooked for us. And it was such an amazing experience. So that would be probably up there. My second was my best friend, who unfortunately has passed away since, but she got married in the Philippines. She was Filipino. Both of her parents were born in the Philippines, but she was born in America. But anyways, got married in Boracay in the Philippines, and some of the most beautiful beaches. And once again, I got to go before it got really touristy and popular, before there was big, huge hotels and stuff. So those are probably my top 2.
Wow, I hadn't heard Vietnam was a big tourist attraction.
Not for Americans necessarily, but in other parts of the world, it's become pretty popular.
Better load up, Bill. Heather, book Billy to Vietnam.
Okay, we'll get you there.
Yeah. Let's see. Favorite hobby outside of work? What do you like to do?
Outside of work. So I do like to read. I'm a big reader. So I read quite a bit, especially this time of year when I have a lot more downtime.
I'm with you there. Too dark to do anything. It gets dark at 6 o'clock.
I know. And I like to hike. I exercise, that kind of stuff. Yeah.
Do you have a favorite book or author that you could share?
So not necessarily a favorite author. I just recently read The Lion Women of Tehran. I can't remember who the author is, but it was really, really good. It's a historical fiction, but really good. Based like two different people that grew up in Tehran and kind of the changes that happened there. And yeah, really good.
Interesting. So are you into fiction or nonfiction, or does it matter?
Doesn't more fiction than nonfiction. Yeah.
Get away from reality.
Yes, exactly.
I'm with you. I usually read 3 books at once, so I'm
Oh,
going
yeah.
back and forth. I'm kind of
I cannot do
crazy guy
I
that
can't
way.
even watch 3 series at once. I got to be just focused on
On
one
one.
thing.
Yeah.
My mind is wild all the
Oh,
time.
you think. Yeah. What about favorite sports team?
I'm a San Francisco 49er girl, grew up in the Bay Area.
Mm.
Yeah, they had a really, really rough season. But yeah, and then San Francisco Giants for baseball.
All right.
Really?
Yeah.
so
Golden
you're-
State Warriors for basketball.
Oh,
Yeah,
really?
kind of. I mean, I was a
Everything.
Bay Area.
Hardcore.
Yeah. I mean, my dad, I have just sisters, so just 3 girls. And so my dad is a big sports fan. And so we watched sports. We were, throwing spiral footballs, at halftime. And yeah, so I definitely am big fans of those. And then my son goes to the U. So for college, I root for the Utes.
There you go.
So
Go
you are
Utes.
not a BYU fan.
Not a BYU fan.
Our last guest was BYU fan.
Should
We
have
let
got
him
her
in
in here
here.
with Jason Murray.
Yeah.
Yeah. What's your favorite sport to play yourself or to participate in?
I played softball in high school. I swam a little
Nice.
bit. I don't do those anymore. I would say now I honestly just more like hiking. Like we have so many great trails around here and stuff like that. Yeah, I've hiked the Grand Canyon from rim to rim
Really?
to rim. Yeah, twice, and that was really fun.
Did you hunt, fish? Nothing like that?
No,
Okay.
no
Stay away
hunting,
from there.
She's
fishing.
from California.
That's
Everybody
right.
checking
I
out.
forgot.
I'm a
California.
city girl.
Yeah,
Yeah.
city. Barry Bonds, like big Barry Bonds fan back in those days?
Back in I guess back then. I wouldn't
that
say
would have been
huge.
fun,
Yeah,
right?
yeah,
Going to some of those games.
Oh, for sure.
But by the
yeah.
way, San Francisco, that was the coldest winter of my life in July.
July, yes.
Yeah. In San Francisco.
Oh yeah, you'll never be. They sell more sweatshirts and more. You've never been as cold as when the fog comes in the summer in San Francisco.
In the summer.
Yes.
Really?
Oh yeah,
Freezing cold.
Didn't know that.
way more cold there than I've ever been. in
just
Utah.
because of the
it's just
humidity,
it's
the moisture in the
it's just
air.
That it just
Yeah.
gets to your bones.
It's
you just can't
windy
warm up.
and it's so
Yes.
cold and it doesn't feel like the sun's doing anything.
Yeah.
The
It's-
sun can be right there and you're freezing to death.
Yes, I agree.
But then, what's the prison?
Alcatraz.
Alcatraz.
Been there.
And going out there and
Mhm.
freezing your death
Mhm.
to go over there and kind of see that. That's cool.
Yeah. Yes.
That's very, very neat and historic.
Yeah.
Like
Last
that
one,
movie.
and then we'll let you go.
Okay.
Favorite movie?
Ooh, gosh. I honestly don't know that I have a favorite movie.
Something you've
Oh my
watched recently
gosh,
that
what did I watch recently? You're like putting me on the spot. I can't even think right now.
nobody
of
knows
what's-
their movies.
No,
though.
you can
I
go
know.
series. You have a favorite series?
Favorite series. Breaking Bad.
Oh yeah,
Yeah, that's probably in my top. Yeah.
Walter White,
yeah,
man,
good
Jesse.
one.
Yeah,
Yep.
such.
Mhm.
I rewatched that.
Sean's
not too
been
Did
long
you?
watching that for the 3rd time.
I love that. I love The
Yeah.
Sopranos.
Yeah.
I finally finished Peaky Blinders.
That's
Still
a good
haven't
one.
finished that.
There's a
one
new
yet.
series coming, a new season coming out, Peaky Blinders. What's
Oh,
that guy's name
there
on
better
Peaky
be.
Blinders?
Um,
Tommy.
Yeah, you
Oh,
know
yeah.
to call me Tommy. In
Well,
the
I'm going
office.
to
I
name
told
that
him.
horse. He's not Tommy. He thinks he's cool. But if you could meet one person, who would it be? Like even present or past?
That's another great
That's
question.
another tough one, I
know.
guess.
I was like planning on Medicare.
We're done with that.
We're done with
Our
that.
brains are fried from that.
Okay. Martin Luther King.
Okay.
Yeah.
I mean, historic.
Yeah.
Cool.
That'd be a good one.
Yeah.
Heck yeah. We're grateful for Nicole coming on today.
Happy to be
And I
here.
think you guys learned a lot. I know we did. I mean, some of this stuff can be mind-boggling,
Yeah.
but if you have questions, and many of you will, most people are going to need an expert. We're all going to need to have this conversation at some point in our life. So
Yeah.
I want to say thank you for Nicole. Get a hold of her. How do we get a hold of you, Nicole?
I don't have a website. I'm kind of old school, but you can email me, call me, nicolejudd@me.com. It's pretty easy. So NicoleJudd@me.com. Sean has my phone number. like I said, yeah, just 3 months before you turn 65, please don't call me like a week before. I'll still help you, but it's a lot harder.
We've been there and done that.
Oh, speaking of that, get your IRA contributions in. Don't wait till April 15th.
Yes, exactly. Yeah.
I'm retiring next month. Can you make a hero out of yourself?
Sure, let's figure that out.
Yeah,
Yes.
Yeah,
Well,
gotcha.
thanks for joining us again, Nicole. All the
Happy.
contact information will be in the show notes. Thanks for joining us today on Harnessing Your Wealth. Signing out, Billy and Sean.
Thank you.
Thank you.
Thank you for listening. For more information about today's show, please check out the show notes. Visit our website at www.petersonws.com or give us a call at 801-475-4002. Peterson Wealth Services is a registered investment advisor. This is a paid-for advertisement. Information presented on this program is believed to be factual and up-to-date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of a personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Peterson Wealth Services.